Metals and Ferro Alloys is in focus on the back of their Q1 numbers. The margins improved sequentially, but the revenues have slipped 6% year on year. The ferrochrome volumes have improved quite a bit. So Subhrakant Panda, who's the MD of Indian Metals and Ferro Alloys, joins us now to talk about that. Mr. Panda, thanks a lot for joining us. You know, the revenues were down about 6% year on year. Can you tell us a little bit about the pressure points that you would have faced this quarter? And also, what is the way forward? What do you see as the full year revenue growth for IMFA?
So good afternoon and good to be on the show. So as you would know, the ferrochrome sector, like any other commodity, can be very cyclical. And so that is the reason why even the volumes have actually improved. We have seen a slippage in revenue, because if I were to compare the average price in Q1 FY24 versus Q1 FY23, then it slipped from about 131,000 per ton to 115 or 116,000 per ton. So that slippage in prices is primarily the reason for the revenue coming off. But as I mentioned, this is a sector where both the finished product price as well as the input prices, sort of have a tango, except that they're not moving at the same pace. So again, if I were to compare to Q4 of FY23, then you're seeing a substantial improvement in profitability, even with prices being roughly the same at about 1,15,000, 1,16,000 rupees a ton. And that's because compared to a quarter ago, our input costs have come up substantially. It has also come up substantially compared to a year ago. One example being, thermal coal and the variable cost of power generation, which is a very big input into our production cost. So the variable cost of power generation is reduced from nearly 6 rupees to under 4 rupees. So that's the sort of movement that we see. And similarly, if you look at metallurgical coke, which is another big input, we are currently consuming coke which is procured in around $440, $450 a ton, and that is now substantially coming off, which we will see the benefit in the next couple of quarters.
Okay, so net, so what does this do to your realizations? What can you guide on for the next 9 months?
So in terms of realizations, what we are, there are two counter pressures at play. One is, of course, global growth is slowing down. That is having an impact on commodities everywhere. China's reopening has not been as robust as it was expected to be. But countering that are two things. First of all, China itself is now, as you would have read, is talking about stimulus measures which will provide a little bit of a boost. But I think the bigger issue at play here is South Africa, which is the world's second largest producer of ferrochrome and the largest supplier of chrome ore, has a severe electricity crisis which is constraining their growth. And they have multiple power outages every day. They're at stage 5, stage 6 load shedding, as they call it. And all of that is essentially going to provide support to the ferrochrome industry. What sets us apart, as you would know, is the fact that we are fully integrated. So while I talked about the impact of thermal coal and metallurgical coke, but the biggest input by far, which is chrome ore, which is the primary raw material, is something that we mine in-house, consume captively, and that provides us stability. So in terms of margins, to answer your question directly, I think our EBITDA margins in Q1 were about 25%. What we have guided is to expect around 20% or thereabouts, at least for the next quarter. And we do expect a possible improvement thereafter as coke prices come up significantly. The latest lot we have bought, which we will start consuming around November or December, is in the low 300s. So that gives you the significant impact that price movement on both the inputs as well as the output has.
All right, so margins at 20% for the next quarter. Thereafter, you will see some improvement. And we take that you maintain your volume guidance at 2.45 to 2.5 lakh tons for this year, right?
Absolutely, Mangalam. We maintain our volume guidance. And we are, of course, starting off on our expansion plans. We have just had the public hearing conducted successfully a couple of weeks ago. And we expect to start construction before the end of the year and commission the furnaces by mid-2025.
Mr. Panda, just before we let you go, we can't let you go without this one. The money for Utkal C. You've been saying it's going to come every, next quarter. Last quarter, you said it'll come in the second quarter. Are we on track for getting that 350 crores?
We are on track. So a couple of points, Mangalam, that I wanted to make. First of all, there are certain processes to go through here, and the nominated authority has, put out the notice which has expired for any claims from secured creditors. Of course, we have none, so but that's a process that you have to go through. So that timeline has gone by, and now we expect the payment to process to move ahead. But the good thing, of course, in terms of valuations, which is a question that you have asked repeatedly as well, and justifiably so, the nominated authority has written to the state government with regard to, the valuations for the leased land portion. And basis the report that we have seen, which is marked to us, we don't expect any write-offs on the amount that we have invested. So that's a bit of good news. But yes, I think we are certainly seeing the light at the end of the tunnel with the nominated authority embarking upon the several sort of processes which precede the actual payout of money.
Okay, all right. Thanks a lot for joining in. Appreciate your thoughts.